Right, good morning then everyone as we head into European trade on Tuesday the 23rd of April. We'll have a flick across markets and see what's going on, and pretty much in the same boat as we were talking about yesterday. Only fresh bit of news we have to go off. Japan issues strongest warning yet on readiness to intervene in currency market, which it's kind of funny. I mean, markets don't really care. It's like the fifth time I've read that article. Not this particular article over the last number of weeks. It's like the fifth time I've read an article that basically says the exact same thing, because some finance minister in the was a finance minister in Japan, or some ex-diplomat, or whoever it may be, has come out and said something that, extremely strong warning that they're going to intervene in the currency. And nothing's happened yet, so the market's still just chilling up at 155. So it'd be interesting to see if markets do have a go at 155 to get them to go and try and intervene and try and test their resolve. But guess we'll have to see how that pans out. But tech earnings this week, again, we're just waiting for the news flow to kick in over the course of this week. Not much yesterday, not much today so far. And I remember the ECB, I can't remember off the top of my head who exactly it was, did suggest that June, the rate cut is penciled in for June, barring any surprises. So that's not something that is too So I'm just reading these articles to see if I can see it, but not something that is too surprising, to be perfectly honest. But apart from that, and Japan issuing strong warnings, I'm not going to speak about everything I spoke about yesterday, because opinions from yesterday still haven't changed. But we do have these PMIs out over the course of today. The fact that we've got those comments out from the ECB over the course of this morning kind of suggests the fact that we are going to get a June rate cut. So I don't think that any of this economic data really matters. I mean, maybe if it's kind of negative across the board, there's more of a chance. The next meeting is in June, so then we're getting an interest rate cut at the next meeting. So I don't know really what relevance this economic data has, to be perfectly honest with you. Certainly in terms of the ECB, it could have an effect in terms of sterling. I mean, markets have brought forward rate cut projections from September into August from the UK. Some market participants think we will get an early one, potentially even somewhere closer to May. But then you got to look at this economic data and see what that says, and again try and look at it with a bit of simplicity, as I always say, kind of looking at one of the extremes. You're looking at when do they cut interest rates. All these economic data prints, they're either a step closer to cutting interest rates or a step further away from cutting interest rates. This could be a step closer if these come in negative. The services PMI obviously being the main focus of attention, but with cut projections being brought forward, you've got to sit there and you've got to hope for these to be negative. Normally not how it works though, when you want something or hoping for something to be negative. Normally doesn't pan out that way, but we'll see what that has to say for itself. It's likely to cause a better move than if it was positive, as it goes against what Deputy Governor of the Bank of England said the other day. So that's kind of what we're hoping for in terms of UK data. We do have the US then a little bit later on, quarter to three, and that's the opposite way. Interest rate cuts are getting further away in the US. Each of these economic data prints are a step closer to interest rate cuts or a step further away. The fact that the central bank are moving away from cuts, the fact that market pricing is moving away from cuts, you will sit there and you will hope for this US data to be strong. Obviously, vice versa to what you want for the UK. Right, you go in line with the central bank are saying, in line with markets are pricing. That's where you get the best moves from. If it goes against that, maybe it's not a trade you want to be in. But we'll cross that bridge when it comes to it a little bit later on. That's what you got to sit and hope for. Manufacturing PMI, more important in the US. Services PMI, more important in the UK. I can't see personally what relevance this European economic data has. The fact that their next meeting is in June, and they've got a rate cut penciled in for June. If this comes out strong or this comes out negative, I don't really think it changes anything, to be perfectly honest. But let's see if markets have a different viewpoint. But I'm going to wrap it up there then, folks. I'll have a further update as and when I get to it. But we got Australian inflation tomorrow, have a look back to yesterday's video, check out what we thought about Australian inflation heading into the rest of the week. But yeah, have a good day, everyone. Best of luck out there trading. UK PMIs, US PMIs, main focuses of attention. It's a lot European data. I wouldn't be so concerned about that. But dollar yen up at 155. Sterling and the US dollar, probably something you got to keep an eye on throughout the course of today.